All right, what's up, Tycoon? Super excited for today's video. We're going to take a look at AQST. This is Aquestive Therapeutics, and this one was a viewer request. So if you have any requests, let me know in the comments below. And there's been some really big things cooking up with Aquestive Therapeutics since the last time we looked at it. And we're going to go ahead and look at a timeline of some articles and break it down by there. And then stay tuned to the end of the video, okay? Because we're going to go ahead and break down the actual chart. And we're going to look at strong support levels, okay, opportunities for you to dollar cost average in at a lower cost than what it's currently at right now, okay? So we're going to start off on our timeline here, looking at this article on February 22nd, okay? The price at publication was $2.29, and AQST is much lower than that right now. It's about 70 cents a share, all right? And here, they gives a brief summary of the article about how they made several advancements, for a potentially transformative year in 2022. Okay. And it briefly just goes into it. It says how they fell roughly from $6 to around 250. Again, it fell lower than that, down to about 70 cents. All right. And here they're saying that they see a great opportunity to accumulate some shares in anticipation that FDA will ultimately approve Libervant. All right. Now that is what most people, all right, are expecting and trying to accumulate shares for, right, is this FDA approval. This is what you call an FDA approval play. And they're looking for approval on this Libervant, okay, this seizure medicine, essentially, okay. So really, really nice. All right. And you can go in here and you can kind of look, originally submitted the approval in 2019, and they were expected launch in early 2022. Here we are in June of 2022, and we still have not got that yet. Right. And that's why you see such a dramatic fall in the price. Right. If people are buying in, I'm expecting early 2022 for this to happen. And then we have this big, we're now into an official bear market in the S&P 500. There's inflation data going crazy. The market is all over the place. So, a lot of the money that was in AQST for this, FDA approval has rotated out of that, right? So that's why we're seeing such a dramatic drop in the share price, okay? But so that's the big thing, all right. And again, this was back in February of 2022, and people saw a big opportunity there to accumulate positions for the FDA approval. There's an even bigger opportunity now if you're still looking to make that play, right? Now, any play is going to be risky, so of course this is not financial advice. This is just a quick update, all right. The next one we're going to be looking at is March 17th. Okay, so in March 17th, they actually got fast track designation for AQST 109 for emergency treatment of allergic reactions, including whatever this word is right here, okay, anaphylaxis. All right, that sounded pretty legit. But anyways, just wanted to show you that. Okay, so that's, our timeline here. February, we're seeing these articles, these bullish articles out at 250 a share, and, people are still liking it, right? Well, now we're getting fast track designation, okay, for one of their products, essentially, right, for AQST's products. And if you go on their website, you can see that they've been up to a lot as well this year. All right, in early April, all right, they announced a common stock purchase agreement for up to $40 million with Lincoln Park Capital, right? So this is them working behind the scenes and them doing what they're really good at, right? They're getting investors to come in, not only through regular stock, right, but they're doing these backdoor meetings, right? We have one here with Lincoln Park Capital. All right, then after that they announce a new CEO transition, okay, and they go over to their new CEO, who is Mr. Kendall. Okay, and we have a nice little article right here briefly going over it from fiercebiotech.com. All right, and it just goes into how we got Daniel Barber, okay, to fill the gap created by the exit of CEO Keith Kendall. All right, and his departure came amid a struggle to get another product to market. AQST had expected FDA to rule on its approval application for Libervant and breakthrough seizures and seizure clusters by the end of last year. However, the regulator delayed the decisions days before the date. Okay. Last month, the FDA told Aquestive it was actively working on the orphan drug exclusivity issues related to filing for the approval. Yet, with the regulator unable to commit to a timeline for resolving the issues, the filing remains in limbo. All right. So responsibility for resolving the situation will now fall on Barber, an executive who joined the company 15 years ago and spent the past 3 years working as chief operating officer. Okay. Barber set out his priorities in the statement to disclose his appointment. All right. And essentially he's just saying that they're going to be focused on Libervant and AQST 109 while carefully managing costs. Okay. And we saw AQST 109 got fast track decisions from the FDA, and the Libervant thing has been up in kind of limbo, right? So if you're willing to take that risk, okay, and investing in it and hoping that they do get the Libervant approval, AQST 109 gets the approval, right? Those are potential catalysts where you may see the stock price rise and where you may want to sell if you're looking to take those profits, right? Now, the other thing is they had another, share deal right here of $8.5 million. Okay, so we had a $40 million share offering. This is an 8.5 million share offering at giving them an average purchase price of 96 cents for the institutional investor and $1.09 for the company's executives for gross proceeds of approximately 8.5 million. All right, so you can read further into these again, some more deeply for yourselves, but I'm just trying to give you guys a timeline. Okay, so we have February, the same stuff is going on. People are anticipating this FDA approval. Doesn't happen. March comes, they get AQST 109, which is another one of their products, right? They get fast track designation. Okay, in April, they get a common stock purchase agreement for up to $40 million with Lincoln Park Capital. All right. They announce a new CEO in May. All right. And here we are in June. They're making deals. They have an $8.5 million deal with, I forgot the name of this company, Brooklyn Capital Markets. Okay. And then here we're seeing some positive initial top line data from part 3 of one of their trials evaluating AQST 109. Okay. And this is the most recent article. This was published 2 days ago, June 15th. So, the stock did have a very red day today. All right. And we're going to actually pull up the chart and we're going to look, it's down 2% today. All right. So let's go ahead and jump straight into the chart. And I want to give you guys some technical analysis and my thoughts on it. Now that we've gone ahead and did, a little bit of some beginner fundamental research, right? And just looking up some of the, reasons why people are looking at this in the FDA catalyst play, right? We're looking at the 3-year weekly chart. And the main things I want you to realize and focus on is we're going to be looking at this low right here. This was our previous lowest low, right, before we created all of these. So what that means is this is going to be a major resistance wall. It's going to be a very long time, and it's going to be very hard for us to flip this level from resistance to support and start trading above there, right? And that's up at $3. The next one we have, all right, was the low all the way over here. All right. And again, we have flipped this from support. Okay. And we're now trading below this level currently, on the chart. All right. And this is up here right around $1.40. So those are our main 2 levels that we wanted to, I just wanted to show you on the weekly chart where we got those levels from. We'll go ahead and look into the daily chart now. And you might be wondering what this bright blue box is. Okay. If you watch my videos, I love to chart up gaps in the stock market, especially on the daily chart. These have a tendency to fill about 90 to 95% of the time historically in the stock market. You just have to take into consideration certain factors, right? There's several ways that it could happen, but the most important one is you have to figure gaps up. Those are going to fill in a bullish market cycle, right? There's no signs of any bullish market cycle right now. We fell from $6.40 down to 70 cents, and we're barely trading above 70 cents right now. So I wouldn't, try to invest in this and think that you're going to be able to get this massive 696% return anytime soon in the near time future, right? But if AQST starts to get all of these approvals, right, and they start to get more and more products out available for sale, what you're going to see is gradually the price of the stock go up, right? So one day we may be able to see it come back up above $5 and fill the gap all the way up to 561, but it's better to set some much more realistic expectations. We went over the major resistance levels right here at around $3 and $1.40. I think that those would be much more realistic take profit levels, Okay, and they still offer some pretty decent returns. Okay, if you buy here in at 70 cents and you hold up to about $1.40, okay, that's about 100% return, right? So these are price levels, and things that you can start to look for, right? We know that the stock can only go down to zero. All right, so we have some support levels drawn up here. And they're basically almost going to be about every 10 cents, 70 cents, 60 cents, roughly 50 cents, roughly 40, and roughly 30, all the way down to zero. I'd say that those are places where you can start to accumulate at, right? We're at 70 cents right now. Wait and see if we come down to 60, grab a certain percentage of shares, right? Come down to 50, grab a certain percentage of shares. Or, if you just want to buy in at 70 and have a stop loss at, 65, and if we get below 65, you just wait it out. You wait to see, do we come down to 40, 50, 30 cents, 20 cents a share, right? Because there's no really determining how low we can go. Yeah, they have some good things coming for them. We just read that they did have, some nice reports coming out on their AQST 109 product that came out 2 days ago, but the stock price has fallen the very next 2 days after that, right? So we're not seeing much positive impact on the price action. Now, the one thing that we could give us a short-term pop and not a trend reversal, but we may see a short-term pop over the next few days on AQST, is we have some bullish divergence forming, right? And what that is when the stock price creates a lower low. So we have a low here, we create a lower low there. But if we look on our RSI right here, okay, at this point, we actually have our low, and then we are creating a higher low. So what this means is the RSI is the relative strength index. So we're seeing that the relative strength of the price is rising, okay, even though the actual price is lowering. So what this means is that, hey, it's coming down to 0.7. This is actually a pretty strong price, or a much stronger price for the stock than it was, back when the stock was trading at $1, right? And that's just going by the data, right? That's not me, in my opinion. Again, this is just some bullish divergence we're seeing on the relative strength index. Now, it's not a guarantee that you're going to get a pop in the near-term future, but it is a very nice indicator that traders like to use, and one that I really like to use as well. Okay, so thank you guys for watching the video. Hope you made it this far. Remember, do your own diligence, do your own research before investing in anything. And if you found something useful in this video, let me know in the comments below. And don't forget to like, comment, and subscribe. Okay.